Well, that was a day so far. Hello and welcome to a fresh new edition of Closing Bell. We are coming to you from the CNBC-TV18 News studios. I'm Prashant. With me, my colleagues Reema and Surabhi are here in the studios. Guys, hi.
Hi.
Afternoon. And of course, Nigel is joining us from the newsroom floor as always. Nigel, hi. Well, inching up and crawling up and doing it in a very steady kind of fashion, aren't we? The Nifty, by the way, is holding on to the morning gains. I mean, it's... solid 90, 100 points, but it's not incrementally added anything. Not that I'm complaining, but the fact is we're up about 0.5, 0.6 in that range since the very morning. And that's where the index is holding even now. Banks also, by the way, with the 0.5% gain that we have on the Bank Nifty, we're now about 1.5% away from all-time highs. In all likelihood, if we do get to new highs, banks will do it before the Nifty itself. And mid-caps and small caps far better, 1%, almost 1% each on both these indices, respectively. Market breadth is looking solid, about 2:1 in favor of advances. And of course, in terms of news flow, etc., you want to track. Lots of results are coming in, which we, of course, have our eye on. But the big global cue, of course, is the Fed outcome tomorrow evening, which we will react to day after. The market is betting on that we'll see another 25 basis point hike, and then there'll be an indication of some sort which will tell the market that no more hikes, a long pause, and that's going to be read as dovish as well, if the indication does come through and it's not left open-ended. So these are cues to watch out for. In very fine form and federal markets find itself. Broader markets are the star once again. Reema.
There are back-to-back FOMC meets. So the next one, of course, is, today, tomorrow. After that, in a span of 40 days, is the June 13th and 14th. So exactly 40 days after. Then again, after 40 days, on July 25th and 26th, will be the next FOMC decision. So the signaling is going to be very important because it pretty much sets the course for the next two FOMC minutes, which are back-to-back. But talking about the individual sectoral movers, commodities and metals are doing pretty well. So Tata Steel reports numbers post-market hours. But right now, you've got Tata Steel up 2.5%. Hindalco has gained 2.7%. JSW Steel has come in for some buying interest. And IT's been on a tear, particularly something like Infosys in the frontline pack. Accompanying it is Tech Mahindra, and even mid-caps like LTI, Mindtree and Emphasis are higher in trade. In fact, LTI Mindtree reported a fairly disappointing set of numbers last week on Thursday post-market hours. But in a span of 2 days after those disappointing numbers, the stock has seen a rally of close to about 10%. But, Surabhi, the day so far is looking good, particularly the mid-cap end, right?
Yes.
So many individual stocks are up more than 10%.
Absolutely. It's definitely a mid-cap day. But even on the large caps, I think one of the thoughts that was crossing my mind when you were talking about LTI Mindtree is that I think the selling in large cap tech is also done. The market's digested whatever had to happen, the Infosys shocker, it's over and done. In fact, a lot of these stocks have seen some accumulation at the lows, and that's only aiding sentiment. Reliance, by the way, will be, by the time we come back to trade tomorrow, we will have the announcement from Reliance Industries. Its secure and unsecured creditors are meeting today to approve the demerger of the financial services business, which obviously is the next big trigger for the stock and for the company. That's a steady pillar for the market today as well. But just a word on the mid-cap flurry that Reema alluded to. Railways, once again, is this absolute outlier theme in the market. Every other day we see these stocks flying. RVNL is up another 10%. They announced an order win. They're in a joint venture. The order is about 2,400 crores. They're 50% partner, so that's an added kicker. But IRCON, IRFC, even BHEL. You'll hear a lot from BHEL on the show today. We spoke with the company, and they're extremely bullish on their railway segment as well. So all of these stocks are up and about. Beyond earnings and results as well, you have movers and shakers like, let's say, Lux Industries, and NMDC Steel, and REC. So actually, there is a fair amount of a PSU play in the market. There's no taking away from that. Just want to mention one more stock. Those are some examples in terms of the mid-cap and small-cap action. One more stock, GNA Axles. In case you track this one and you are wondering why it's down, despite what seemed like a pretty solid fourth quarter, it's the commentary. The management, Mr. Singh, told us that the North American market has seen a little bit of a shakeout in the first quarter and demand is down 15%. They're hoping other segments will make up for it and second quarter onwards North America will revive. But that concern seems to be playing out on the stock. But otherwise, no complaints, Nigel. It's up and away and about 3.5% away from the all-time highs now.
Well, that's right. Surabhi, but given the kind of rally that we're seeing, it appears the smarter money is playing for a bit of a pause or some consolidation. Whether we get that or not is going to be crucial. But at the start of today, if you looked at two strikes, so the 18,100 put as well as the 18,200 call, the premium on both these two was around 57 rupees. So these writers, they're working for a bit of a band. On the upside, since the 18,200 call is getting written, they're working for that 18,260 odd level holding out. That's on the upside. And on the downside, they're expecting this 18,040 odd level to hold out. So that's the broad band, 18,040 to 18,260 on the upside, 220 points approximately. In case there is some consolidation, then these call as well as put writers will make some money. I'll tell you one more thing. Since we had a truncated week and we were missing out on Monday, that's why you will have the weekly expiry for the Nifty that will take place in the earlier. So it will take place in a shorter duration because you have Monday off. So that's why in the next 2 days you'll have Nifty expiry that will play out weekly expiry. And today you'll have the financial expiry as well, financial services index. So keep an eye out on some of these banking as well as financial related stocks. And just one final word, since everyone's talking about the index, I think the broader markets is telling you that there is a feel-good factor that's playing out. The Nifty is up close to around 0.5% odd, but just pull up the mid-cap and the small-cap indices. After being outperformers, they're up close to around 1% apiece. So that's telling you that retail portfolios are feeling rather good, guys.
1% on both indices, Nigel. So, yeah, that's true.